AI and content, my fundamental belief is all the things that AI can make is now the floor. That's like the worst thing that can be produced on the internet, right? The cost is incredibly low, lower than any human effort. Anyone can do it. So it is not of unique value. It's not special. I don't care how much prompt engineering you think you're great at. The content that is outputted by a large language model or by an image generation model will not, it will not stand out in the field. It will be the crowd. So to stand out in that field, you have to do things that humans are uniquely good at.
I want to start like at the genesis, like we know around Fishkin, Moz, SparkToro, what you've been up to with your author. But like, I personally don't know too much about like again, I've done my research, but like for the audience, like let's go all the way back. Like, how did you get into entrepreneurship and starting your first company? I read in one of your bios, you kind of had like a tough time in the start. You lost all the money, and then you started and like something out of university. But like, really give the audience a background on like how you get started. How did you get started in the space of entrepreneurship, and like what was that natural transition into digital marketing? And let's set the stage. If you can share some dates, that would be helpful as well, like years.
Sure. Yeah. So I think I started in digital marketing before I became an entrepreneur. So I dropped out of college in 2001 and joined my mom's business, which she had been doing uh, offline marketing, right? Like old school marketing, logos, letterhead, yellow pages ads, that kind of stuff, print ad design. And I started working with her building websites for her clients. This is like, in the late 90s, early 2000s, lots of people wanted to get on the web for the very first time. So we were building websites for lots of small businesses in the Seattle area. And that did not go so well. After a few years of that, we were deep in debt and the business was doing miserably, could barely, make payroll. We couldn't make payroll most of the time. She wasn't getting paid. I was barely getting paid. And that is when I started having to do SEO, because we had SEO subcontractors who would kind of help do that for our clients, but we couldn't afford to pay them, and we still needed the money from our clients. And so it was like, okay, Rand, you got to figure out SEO and go do that for our clients. And so I struggled quite a bit, but eventually got relatively good at it. And then I started this blog called CEO Moz that detailed a lot of the things that I had learned about SEO and a lot of things I was frustrated about with Google and how they worked. And over the next few years, that blog took off like a rocket. I think there just wasn't a lot of good information about SEO. We unintentionally, were sort of adopting the content marketing mindset. I was publishing 5 nights a week, putting up a blog post every night. And many people in the early SEO communities gravitated toward Moz. In 2007, I became the CEO of SEO Moz, and the old entity that had done like website design and all that went away. And we raised a round of venture capital funding at the end of 07 and had started to build some software and had success with it. And then that really took off after 07. So we basically doubled software revenue every year after that. So having gone from SEO consulting and a blog to software, it just took off like a rocket. We were obviously riding a couple trends. The growth of Google was a big one, and the growth of SaaS was a big one. So people, wanted to use software on the web and not have to get it installed. And we were at the right time, right place with both of those. And we had the right audience, right? All these people who were already paying attention to what we did. And I think that's why the business worked so well.
Yeah, awesome. Thanks so much for that background. Like, it's late 90s. You kind of give us the genesis, and obviously we know Moz. It was a great, successful. Like, it's still like we use it internally at FI. I don't know if you know that. So we're a customer. And then then you didn't really talk about it, but obviously that led to SparkToro. And the audience members who don't know, Rand also wrote a book called Lost and Found, which is really interesting. So like, do you want to just dovetail a little bit and like tell us a little bit about the book, and like, you talk a little bit about the resilience of an entrepreneur, and like that would be helpful to kind of just dive a little bit deeper into, because a lot of our audience members who'd be watching this are first time founders, maybe they're mentors who are like participating in early stage companies, but we're definitely at the early stage, or we have like investors at the early stage. So, and I think that is not a topic that's talked a lot for various reasons. It could be cultural, or it could be, yeah, there's a lot of different dynamics, but would love to just like, again, we're just trying to set the stage right now, but like, can you tell us a little bit about the book and like kind of the premise around it, and then I'll kind of get into some of these heavy hitting questions.
Okay. Yeah. So let's see. I was the CEO at Moz for many years, and then stepped down from the role in 2014 during a bout with depression. And I promoted my longtime chief operating officer to CEO with the board's approval, of course. And then I stayed at the company for another 4 years, which probably was a mistake. I think that those years were really, really tough on everyone involved with Moz, and the company did not continue to grow as well. Growth rate sort of shrank, every year thereafter, which obviously, when you're venture backed company, the growth rate, they need that exponential hockey stick. How do you get to $1 billion? And Moz kind of tapped out around 50 million in revenue. And during that same time, I disagreed with a lot of the leadership teams, new leadership teams' direction and decisions, and became very frustrated with that. And so I think it was 2016, I started writing this book, Lost and Founder, about my experiences and sort of the things that I had learned, good and bad, about entrepreneurship. And my hope with the book was to be very open about the things that people usually don't discuss around companies and especially venture-backed startups, because it doesn't make anybody look good. The overwhelming majority, 97%, 99% of all companies that receive venture backing are going to fail to meet their investors' expected rate of return. 95%, I believe, will fail to meet even a minimal rate of return, like 2x or something. And something over 80% won't even get investors their money back. So not even a 1x, right? Not even as good as giving a 0 interest loan. You're going to lose money on it. And in all of those companies, right, in all of those 99 out of 100 cases, the story is pretty ugly. But no one has any interest in telling those. And so the only stories that entrepreneurs hear are the Facebooks and the Googles and the Apples and the Amazons, and obviously, people like WeWork and Uber, who had meteoric rises and then spectacular falls too. But I think, unfortunately, for whatever reason, especially young folks in the entrepreneurship world are very attracted to the huge hyper growth success stories. And there are so few of them, vanishingly few of them, that happen. And so I wanted to tell the story of what that ugly middle section looks like. Moz wasn't a failure. I think, after I left the company in 2021, Moz did sell, right? So like a private equity company bought Moz, but I don't think, maybe our early stage investors made 5, 6x their money. Maybe our late stage investors made 1.5, 2x, so, somewhere around there, way below, obviously, the sort of 10x minimum that they're looking for.
Got it.
And that was really, it was not great. So Lost and Founder sort of tells this story. In recent years, a lot of folks have passed it around as kind of a cautionary tale of why you shouldn't raise venture capital. And I think the Lost and Founder has become associated with an anti-VC movement, which I'm not mad about.
It's funny you bring that. it's funny you bring that up. I interviewed Adam Robinson from RB2B. I don't know if you've seen him floating around on LinkedIn a little bit, but he's bootstrapped himself like 3 times over. And I'm like, hey, like, what's your deal? Like, well, do you not want to take venture capital funding? He's like, like maybe if I hit like 10, $20 million in ARR or something like that, then like if I want to get at that point, but maybe he's like, but like I like the freedom. I don't like someone breathing down my neck. I can take really bold decisions and not have a board breathe down my neck, right? And like I don't want to say it's like I think you hit it spot on. There is like a bigger trend now, and we also advocate it at F5. We tell our founders like, don't even think about venture. Like you're not ready for that. Like go get customers, go get customer revenues, grow organically and stuff. So it's very interesting. I think you kind of saw that or very, very early on. And now a lot of people are breathing it because like a lot of the venture capital dollars are also drying up, right? So you just need to get better at like generating revenue from your customers.
Well, and I want to be, I want to be fair here. I did not, when I left Moz, I did not have the money to start SparkToro on my own. So SparkToro is not a bootstrapped company, but we also didn't want venture. And my frustration was that there's nothing in the middle, and there should be. There should be an asset class where people who want to build profitable long-term companies that can produce dividends, that can return money to their investors, can be able to build that without the requirement of becoming $1 billion unicorn or dying by trying. And there's nothing, it doesn't exist. And so we created our own docs. We worked with an attorney here in Seattle to create our own document structure that basically so SparkToro is structured with 35 angel investors. So a lot of folks like yourself, right? And they put in between, $15,000 and $100,000 checks each. We raised $1.3 million. And this is in 2018. And then in 2023, so last year, we paid them back their 1.3 million. And now every few years we pay dividends on the profits that the business makes. And we don't have a board of directors. We don't have a lot of investor input. Our investors are obviously happy to help us, and they have been helpful, but they are very hands-off. And the beautiful thing about this is because they got their money returned to them and now they make profits, and if the company ever sells, of course, they get their money from that too, they can reinvest that money back into the startup ecosystem. And I think that's a really beautiful value proposition. I think that SparkToro can function as a dividend type of stock rather than a growth stock. And I'm actually, so my other company, Snackbar Studio, funded in exactly the same way. It's 2 classes of shares. One class of shares disappears after we make the payment back to our investors, repay them. I think this model could be really wonderful for businesses going forward. So I would love to see it take off. We actually did take our documents and open source them. So if you search Google for SparkToro funding, you'll find a blog post from me that links to Google Docs that are lawyer prepared, that are ready for use by anyone. So they're open sourced, and a few companies have raised money with them.
Yeah, that's great. I didn't know that that exists. Definitely, we'll throw that up in the FI resources as well. No, that's a great resource. I'm glad you're sharing it with the audience here. I do want to kind of. So we talked a little bit about SparkToro. We talked a little bit about the book and all that. So I want to kind of get specific down to the founder and like the founder traits. And like you picked up a lot of tidbits of advice on building teams, what type of traits a founder should have. So like, let's kind of start with like leadership and team building. Like you build teams, obviously, Moz, at SparkToro, and at your the other entity that you just mentioned. So like, a lot of the founders there, they're still starting out. So like, let's go back to like the days when you're starting off, like when you were starting maybe Moz, like when you're on a shoestring budget, like, and you're starting to build out your first team, what are you exactly looking for? How are you evaluating it? And like, yeah, like maybe what is your advice around that? And if you want to share whatever you can from your experience.
Yeah. I think my advice here is probably pretty succinct, which is I would encourage everyone to work with people who you really enjoy working with. Not not the absolute best, most talented, worked at big company or has like crazy success in the past. Work with people whose company you truly enjoy. You love being around them. They make you feel good about your work and your day. Going to work with people you dislike or that you're just kind of putting up with sucks. It really sucks. I'm going to tell you right now, like it sucks away energy from your team. It makes you less productive. It makes you less excited about going to work. Don't do it. If you can possibly avoid it, just don't do it. And I would, if over time you discover that your team is not enjoying working with each other, I would urge you to make the hard decision and let go of the people who are the most difficult to work with, who everyone sort of is frustrated about. If they're going out for, a drink after work and they're complaining about that person, let them go. No
Yeah.
matter how important and how valuable you think they are, let them go. I wish I could go back in time to my early Moz days and shake myself, just give him a slap and be like, just fire him. Just fire that asshole engineer that no one likes working with. My God.
It's funny.
Um,
We had Bethany from SparkToro. She's like a fairly new, younger founder, and like her wisdom on this was pretty interesting. She's like, "Hey, you have 5 people. If there's one bad apple, that's 20% of your workforce. You have 20% of like a naysayer, a
no,
negative
I
person."
disagree. I
Yeah.
fully disagree with that. That is not 20% of your workforce. That is 80% of your workforce. One bad apple will drag down everyone
Oh,
else's
yeah.
productivity and happiness. It is not just that person. I'm not talking about underperformance. That
Yeah.
person, that wonderful, that like person that you need to let go, they might be the most productive member of your team. They are the person who you think is carrying the company, and they are actually dragging it down because they are making it so that everybody else does not enjoy working with them, and that means they don't enjoy working at your business, and that means your business is suffering. I promise you.
Yeah, that's spot on wisdom. Highly recommend the founders, whoever was on this call, staple that and on their board or whichever. Like, just work with great people. It makes a
It's
significant.
just what Tabithia said in the comments, right? One bad apple, it makes the other apples rot.
Yeah, perfect. One, I want to just talk about one thing around just to, again, we're trying to be more founder centric and talk about the qualitative traits. Let's talk about decision making. And you do talk about this in tidbits. It's like, as a founder, we're making decisions with like sometimes no data because it doesn't exist. We're going into a brand new market. We're figuring this out. Reid Hoffman said is like you jump out of a plane, you build out a solution as you're going down. You've done this. This is not your first rodeo. This is like your third or fourth, and I'm sure you've had some small stuff in between. Let's talk about like how are you making like how does Rand Fishkin like make a decision like with all this experience and wealth, like especially if you're going into an uncertain territory with limited data, right? Do you have a framework? Do you flip a coin? Like, how do you go
Yeah.
about this?
So I think one of the biggest things. I mean, look, I respect Reid Hoffman, but I don't like this analogy. I think, well, let's see. I think it does apply to a lot of venture-backed companies because you have a very short time frame in which to prove that your thing works. I just hate that model. I think it's dumb as hell. And I would argue that what you should instead have done is rather than jumping out of a plane, maybe you should try learning to ride a bike first. And then once the bike gets going at a nice speed, all right, maybe you transition to an electric bike. And then once that gets going, you can figure out a car. And the plane is like years and years and years in the future. What I'm saying is you can minimize your risk by uh, structuring your business in such a way that not every decision has to be right, that you give yourself time to fail and find the right path. And that means that a lot of decisions are not life or death for the business. One of the things, like when SparkToro started, I had lots of theories about things that would work in the product. I tell Casey this all the time, my co-founder, who's our CTO and builds most of the product, almost all the product. And I I often have this conversation with Casey where I say, hey, I'm going to suggest that we build features in the product that are not going to work. People will not like them. They won't resonate. They won't work. 80% of the features that you're going to build, that I'm going to tell you to build, are not going to work, but 20% are. And we don't know what those are, but because of the way we've raised money, because of the way we structured our business, because we're profitable and we have very low expenses, we can afford to wait. We can afford to be wrong a bunch of times before we're right. Venture world does not let you do that, right? They basically say, no, we're going to invest in 100 companies and one of them is going to accidentally be right. And then we're going to, make them seem like geniuses in the press 10 years later. And I ain't about that life. I'm telling you, right? Like, if you can give yourself the freedom to fail, to make lots of poor decisions, will your intuition catch up? Yes, absolutely. Do I make way better decisions now than I did 20 years ago in my career? Absolutely. Of course. Did that come through a framework or a process, or I'm going to give you this 10-step list? No, hell no. The decisions you make are going to be better than the decisions I'll make because you know your business, you know your customers, you know your audience. That the only thing I could possibly tell you to do, which unfortunately very few startups do, is just talk to your customers all day, every day, if you possibly can. Talk to your customers a lot. That will give you the intuition to make right decisions, and then structure your business in such a way that it's okay to be wrong.
Yeah, I love that. I love the last part. They structure the business so it's okay to fail and it's okay to just learn, and iterate.
Learn.
Yeah, that's a big one because not a lot of people emphasize that. It's just like, let's go. I guess on that note, I asked this question to a few product people. I'd be curious, how do you define product market fit?
I have a blog post about this. Hang on, I'm going to put it in the chat because I think the whole concept is dumb. I don't think it exists. I'm serious.
I'm going
All
to
right,
change something in the FI curriculum. Like there's a whole.
Yeah. Here we go. So the thing that's broken about the idea, the concept of product market fit, is this weird belief that you either have it or you do not have it. And that is not true for any. It is completely and absolutely a spectrum. You are always on a spectrum of, is the product that we've built resonating with the audience and customers who need it? And that is more true for some businesses and less true for other businesses. But this binary is insane. It's just so dumb. Like, oh, until you have product market fit, you should do these things. And then once you flip the switch, you should do these other things and none of these things. And that is not how any of this works. I can't argue against that enough. I'll give you an example. So I run an indie video game studio, right? Snackbar Studio. It's working on its first game, but it doesn't have a lot of failure tolerance. If we release that game, it's not like software as a service, right? Moz and SparkToro, where if we release something, we can improve it, we can upgrade it, we can roll back a change, we can add something else in, like we can modify the product and then see how it lands with customers. Games are not that way. Games are a lot like movies or a book. When you launch it, the product is what it is, and people are either going to love it or hate it, and you're sort of off to the races. So that sounds like the binary product market fit that I'm arguing against. And here would be my argument, which is very few small studios play test. They don't get large groups of people to play their game and see if those people come back to the game again and again and resonate with it and put more hours into it. And that is a sign that your game is fun. That is a sign that your game is having success. And so one of the things that we did in our budget with Snackbar is say, we're going to, on a small scale, act like a big AAA studio and see if our game is fun before we ever release it. We are going to do extensive play testing and we're going to check hours in and all that type of stuff, rather than releasing and crossing our fingers and hoping for the best. That's what I'd argue for in every other kind of business too.
Yeah, very, very interesting. Just like there's like a bunch of webinar content we have around PMF. That whole playlist is just throw it out the door. But yeah, no, it's good. I'm glad you're giving contrarian thinking around this, because like we've been harping around. There's like schools of thought around PMF around it. So and you've kind of been like, yeah, that doesn't make sense. It's either you got it or not. I remember Eric Ries talks about this in his interview with Lenny, and he's like, if you have to ask me about product market fit, like you know the answer to that question already, right? And that was kind of his approach to it and stuff. But yeah, I think there's
Yeah,
maybe
I like and respect Eric a bunch. Eric was he actually introduced me to my agent for Lost and Founder for the book. I think very highly of him, but I strongly disagree. There's
yeah,
no such thing as product market fit. No one has it. No one doesn't have it. It's just how much or little is your product resonating with customers, and what can you do to improve that over time?
yeah, and I don't think there's a right or wrong around it. It's just like ultimately you guys are landing at the same conclusion, right? It's like, well, how much will your customer love your product, right? Cool. I think that was a bombshell right there. But no, I definitely appreciate
To
kind of your.
me, you know what I equate it to? I equate it to this. It's like someone saying, "Does your business have revenue or not?" And that's not the point, right? Like the goal is you want more of the revenue and not less of the revenue. And all the things that you can do in the world around your business are like to grow, get better.
Yeah.
So this idea of this binary just it boggles my mind.
No, no,
Anyway, we should go to the other questions, but
yeah, no, no. We're gonna have a whole talk on this, like why product market fit doesn't exist. But no, like I'm glad that you do bring it up because it does show the founders here that are following this type of content. Like, hey, you need to look at both sides, right? One of the things I do want to kind of dive deep into. How are we for time? Okay, we have we'll do about like 3 more questions and then jump into audience Q&A. But let's talk about like you've been in this space, you said, since late 90s, where in the 2020s. I was born in the 90s, so I always think like, hey, like 2000 is just like 5 years down, but I was like, what, it's 20 years ago. But anyway, you've been in this space for some time. The space is always evolving, like digital marketing and all the types of, like, we'll talk about like learning and development and how are you always on top of it. And like, you've been right. Like even when like I watched your video when you're talking about you opened up with what's your favorite pasta and risotto and all of that type of stuff. I really like that, by the way, and that definitely resonated quite a bit. But like, how are you like on this? Like, how are you able to consume content and know kind of like look what the trends are, and provide advisory around like, hey, this is kind of where you guys should be thinking about, like how, like again, Amanda came up with the 0 click content. I don't know if that was I'm assuming it was with the two of you, but like you've been on it. So then, and the reason I want to bring this is not specific to digital marketing. I think digital marketing is any field, but as that founder, that continuous learning, adaptability, development, like that hunger and desire has to be there. And you've been doing that for like 20 plus years. Like again, like, are you doing this with a bottle of wine? Like, is there a pill you take to like absorb all this? Like, what's your practice on that? Because I do feel like eventually you get to a local maximum and be like, hey, I'm not learning anymore. Like, I feel like I'm the king of my domain, which is probably the wrong attitude, or probably is the wrong attitude. But yeah, would love to kind of get your thoughts on professional development, learning as a founder, and like your journey around that.
Let's see. I would say a quality that I have that probably helps here is a deep, genuine curiosity and care for other people. So, I get to meet a lot of people as part of my work, right? So just before this webinar, I was speaking at Seattle Interactive Conference, which is obviously here in Seattle, about a 15-minute drive from my house. And yeah, like after my session this morning, I talked to half a dozen folks about like their experiences and what they had seen in the world and what problems they were having. And some of them, reached out to me on LinkedIn, and great, like wonderful. That I think that is constant learning for me. Like absolutely always learning, always talking to new people. Even here, right? Like we're in the comments together, and people are telling me that oh, I'm the founder and CEO of this. Here's what we do, and even that tells me, oh, okay, this is a space that people are interested in. Oh, there's not that many people interested in this other thing. This question got a bunch of thumbs up. That must be something people are deeply curious about. I should go research that more. I think it's just that natural desire to learn more and know more, and also just an empathy for people, right? Like if we're on this call together and you're trying to build your business, start up your company. I love that. Like, I care so much. I care so deeply about people who are trying to start new things, especially things that can, exist profitably for a long period of time, because I truly believe that's what's good for the world. I think that right now, wealth and power and economic prowess is far too concentrated. And the only way to break the stranglehold is innovation from small new companies. I want to see tons of competition in the economy. I think that will lift up people's, standard of living, and it will spread wealth throughout the world. And that wealth can be used to, fight hunger and disease and climate change and all the threatening, fascism that we're facing. I love that. I think that's a beautiful thing. That's why I love entrepreneurship, right? Because I think it is a solution to all this stuff. And so I care about entrepreneurs. And so I want to talk to them. And so I want to learn what troubles they're facing and then try and help them solve whichever problems I can. I don't know how, yeah, you see this online sometimes, like, I don't know how to tell you how to care about other people. Care about other people. That is the biggest solution. I think the worst entrepreneurs out there are the ones who are in it exclusively for themselves. They're not there to solve someone else's problem. But that solving someone else's problem is the core of what makes a good product and good company. And I know there are people out there who will say, well, but look at Elon Musk. He clearly cares about no one but himself. I think you're probably right today, but I truly believe when he started the companies that he started, and mostly the ones he runs now are the ones he's bought, but I think he cared about that problem too, right? He cared about solving that problem. And more directly, the people who work at those companies care about solving those problems. So ignore the rich billionaire guy who bought his way into Tesla and Starlink and all this other stuff. Like, the people who work at those companies want to solve those problems.
No, I appreciate that. That kind of breakdown and overview, like you talked about. It's like humility, it's empathy, it's always being curious. I think that's like the main thing. As long as you're curious, the rest will follow, type of thing. One more question, and then I need to ask the final question, which is going to be about like the future, and then we'll open up for audience. But you hinted a little bit towards this when you were talking about your earlier entrepreneurship journeys, but like, let's talk about the pivots, the art of the pivots, and how do you kind of evaluate that as a founder? Because I think that's a really tough decision to make. Should probably come naturally, ideally with data, but like, I think you do talk about it as well in some parts. When I was doing the research, it came up, but like, I'd be curious to know, like, when you're advising and you're speaking to other founders and they're like, hey, we're thinking of pivoting from one point to another, what are your kind of like what's your thought process around that? Like, is that, again, maybe just like, let's not think about the venture funded companies, because for them it's like they're kind of like sniffing like wherever money is. Like, okay, let's go, and like they'll pivot every like third week. But like, as like a bootstrapped or like a, let's say, lightly funded company, which is, I'm calling your company's architecture, but as a lightly funded company, like, where do you kind of see that? Because I would imagine like SparkToro, like, probably also internally, you've had those conversations, right? And like, how do you navigate that, right? So would love to get your 2 cents on that.
So I did write a chapter about pivots in Lost and Founder, although it is sort of centered on the venture world's advice around pivoting. And my general argument is that if you are pivoting exclusively for the sake of chasing the money and where growth is going, you should just be very careful not to do that until and unless you have really exhausted your opportunities in one field. I think pivoting, for example, is what killed Moz's growth. So Moz, at the board of directors level, we had big conversations for many quarters in a row. This is like 2012, 13, 14. And the fear from the board was the SEO software market is not big enough. It won't be big enough to produce $1 billion company. And so therefore, Moz should expand its offerings and go after email marketers and content marketers and social media marketers and influencer marketing and all these other disciplines, because we believed that those markets were growing and we're also going to be big. But we did that way before Moz, the product was mature and secure in its leadership position. And as a result, we turned off a lot of our historic customers who switched to other products, SEMrush, which became a public company, and Ahrefs, which is doing north of $100 million in revenue. So those two companies proved that if we had stayed focused on SEO and continued to be the market leader, we almost certainly would have achieved our investors' goals and our outcomes that we wanted. But instead, we pivoted because we believed there was more growth to be had elsewhere. And I think that's where that chapter comes from. My advice on pivoting is, if you have intuition that something is not working, right, that the business you've chosen isn't working, it's not resonating, the market is changing and moving, I think that intuition should be trusted but interrogated. And it can be interrogated with three things: data, passively collected, like large scale data. So, market research, you buy a bunch of clickstream data, you buy a bunch of market intelligence data. Surveys, good to run surveys to your audience, try to run them to other broader audiences. You can pay people to distribute those, you can co-market with surveys. And third is interviews. Have actual calls and interviews and sit downs and coffees and chats with lots of people who are your existing customers and the market you're thinking about pivoting to. Talk to them about what you're thinking, get their feedback and thoughts. I do recommend hiring someone to do those interviews or contracting, because I have found that as the founder of the business, people don't tell you the truth. They tell you what they think you want to hear, right? People are just nice. Like, I know, in the United States, there's like the belief that people are not nice or not kind, but a lot of people are very kind. And when I have a conversation, me and you, Ehan, get on the phone, I'm like, hey, I'm thinking about doing this with SparkToro. 9 times out of 10, even if you don't think it's a great idea, you'll be like, Rand, that's a great idea. I love that. I want to see you do that. So I don't do it. We hired Asia Arangio, who runs Demand Maven, to do like all of our customer interviews. And she's amazing because she does this thing that I cannot do, which is she will ask a question. She'll be like, yeah, tell me how you do your prioritization of your content process. And then the person will be like, well, yeah, we use a checklist. And she'll just sit there and wait. She'll just wait for them to give more. And then they'll like expand on it. I watch the video, recordings, because Casey and I try and learn from them. It's awesome. So
Yeah.
That's my advice.
No, that's great. And like, also you're removing bias, right? There's so much bias, like, especially if you're going to people that and then you're very public, so people probably don't want to let you down or say something that's off. So there's different like confirmation biases and stuff and all that. All right, I gotta ask the question. A lot of people, you're Rand Fishkin, Moz, marketing guru, all that stuff. I want to talk about the future vision, and like, you talk a lot about this in your posts with 0 clicks and I think in that pasta, I'm calling it the pasta video, but the ravioli video, sorry, the risotto video. It's
I'll put the link in the chat.
You talked about this, where it's like marketing today is like, as much as it's futuristic AI and all this other fancy stuff, it's actually marketing from the 70s. It's like right place, right person, right time, and all that type of stuff. So like, maybe if you want to take a few minutes here as the closer, and then we'll go to the audience questions. Folks, if you're in the Q&A, please upvote the one you want so I know which one to ask Rand. But like, I'd love to get your thoughts. Like, where are we going with all this? Like, the future of marketing. We got AI going on. There's AI content generation. There's multimedia generation. Like, I can create these videos. I can create a 3D Rand to say whatever I want. Like, a lot of that is noise, and there's signal versus noise. But like, yeah, I would love to get your take on it, right? As someone who's been in this space and been a market leader.
So let's see. Here's what I'd say about AI in marketing. Let's see. AI in content. My fundamental belief is all the things that AI can make is now the floor. That's like the worst thing that can be produced on the internet, right? The cost is incredibly low, lower than any human effort. Anyone can do it. So it is not of unique value. It's not special. I don't care how much prompt engineering you think you're great at. The content that is outputted by a large language model or by an image generation model will not stand out in the field. It will be the crowd. So to stand out in that field, You have to do things that humans are uniquely good at. Here are some things that large language models are terrible at. Having a new perspective. It just doesn't. AI will never have a new perspective because a large language model is tokens that are coming after other tokens, right? And it's good at predicting which tokens come after other tokens. So it cannot do new and novel things. Comedy, humor, fun. Have you ever tried to get ChatGPT to make something funny, to tell you a joke? It is god awful. I swear to God, dad humor is 100 times better than what ChatGPT will do. It just has no, there's no soul to it. It's not funny. Like, it's the worst. I also think it's really bad at insight. So it can give you lots of information, but it cannot give you insight. It's almost never the case that you'll look at something, read something produced by a large language model and say, wow, that's really insightful. Could it ever get there? I doubt it. I don't think that's how tokens that come after other tokens ever work. I think insight comes from a novel approach and novel thinking, but that's just my 2 cents. In terms of where
one
I think
thing I would add to that list, just so we're on that, is survey data. So like if you're able to survey an audience and get something that's a little bit unique, that you can like make that
any kind of any kind of research,
like
a chart, a graph. I mean, here's an example. I did a post on SparkToro that has nothing to do with like my own research. I mean, I did research. I put together a chart. It went crazy bonkers viral because I had this insight that over time, email marketing, open and click-through rates probably hadn't changed. So I went back and got the data. Could ChatGPT was useful to me because I asked it, hey, will you pull up any study from the past 20 years that's ever mentioned a email click-through rate or open rate or delivery rate? And then I put all of those together into one chart, and ta-da, like this did extraordinarily well. It was like the cheapest market research I've ever done because it was just citing a bunch of other people's studies. Did great, right? So I think you're absolutely right. That novelty and that insight, uniqueness, things that a large language model can't do, that to me is how you stand out.
Yeah, sorry, I didn't mean to interrupt your flow there, but like I do, because we're really we're looking at that at FI, but like, okay, like how do we produce this stuff? And because like we grew organically the same way that you've done, which is like, hey, let's just optimize for SEO. But like now it's becoming super saturated. Like, like we have this network, global network of like great people. How do we capture that and present it to life? But yeah, sorry, I didn't mean to interrupt your flow. So you're talking about the vision and the future of marketing.
No, I mean, I think I'm pretty good there. The only thing I would say is marketing is moving from a world that is attribution centric to a world that's going to have to be lift based measurement centric. And so I shared that video you mentioned on the risotto one is in the comments there. So
when you release that attribution one, I think of like companies like Hockey Snack, which is like this YC company that's like doing really well on B2B. And like, you're coming like, like it's really interesting. And then I remember seeing a keynote by Gaetano at CXL Live a few years ago. And he's like, all this attribution data is like mumbo jumbo. Like just because you saw this person click like 3 times, that's not going to work on the next prospect, right? Specifically in the B2B. In B2C, maybe, like I've been on both sides of B2B and B2C, and there's like, I hear when marketers are like, hey, B2B and B2C at the same time. It's not the same. It's significantly different. On the B2B side attribution, like it's a little bit wonky. B2C, maybe, like I can see some benefit, but like, yeah. No, so anyway, audience, Rand's been very generous and shown some great content there. Please go and look, and we'll definitely add this all to the show notes and the recording if you're watching this. My team will kind of go through this. All right, how are we for time? Okay, we're at 46. I want to take a few audience questions, and then what we'll do is we'll break out for some networking. So whoever's in the audience, we'll have some virtual tables. You guys can network with one another. All right. I had one question which I really liked here about an experimentation because you briefly talked about it and um, love to go deep. So Scott from Toronto is asking, when experimenting with new features, do you value early feedback on prototypes before building the feature, or have you had more success of building them right into the product, getting feedback on a live version? So from a product development perspective, are you doing customer
Yeah,
development
I
first and then launching? But yeah,
so this one it's real simple. It's kind of a binary for me. If the feature is very big and it's going to take weeks or months of effort, then I absolutely would encourage you to do feedback and testing on the prototype, right? A wireframe, a sketch, just a conversation even. If the feature is going to take Casey 2 weeks or less to build, just build it. You don't know, right? Getting the feedback, that whole process will take longer than 2 weeks. So just build it, use your intuition, go for it. Especially if we're talking about software as a service. In the video game, for example, right? Or when I was writing Lost and Founder, I didn't have those opportunities, and so then you really have to have phenomenal instincts that come from deep experience and background, because you don't have the chance. The only thing you can really do is like build, right? I can write the book and then have people read it, or read a chapter to a friend, to my wife, get feedback from my editor, that kind of thing. But I don't have the opportunity to like put it out there and float it and see how it goes. Same thing is true in the game, right? We can build something in that we think is right, that we think is going to help the player enjoy the game more, get more fun out of it. We can play test, but we can't put it out in the wild.
got it. Yeah, sound advice. All right, I'm going to try. Naveen from Dayton is asking, how do you keep up with market expectations? Did you follow them closely or totally focus on the product or service you provide? So this is, I think, still on the same path, like how are you collecting customer feedback? Or maybe what's your
Yeah,
frequency of customer
market.
feedback? Yeah, like do you have a CSM team? Like how do you evaluate that?
No, I like I said, there's three of us who work at SparkToro, right? It's me, Amanda, and Casey. Um,
Oh, I didn't know the team is that
and
small. I thought it was okay, wow.
just the
Cool.
three of us. Yep. Um, so yeah, I do pay attention to market trends and market data, market research reports. I find that stuff fascinating. I use it to inform, the decisions that I make around what to invest in for the future. But not exclusively. Like I combine that with what do I think about, you know, um, customer feedback and things people have been telling us. We get a ton of emails from our customers. I shouldn't say a ton. We get a small number of emails from our customers every week. Those obviously go into our decisions as well. So, but yeah, nothing formal. I like it that way.
Okay, awesome. And then what's the frequencies weekly you said on getting feedback, or like is it like how often are
I
you
mean, it's
guys?
all the time. Yeah, feedback is like all the time, just constant in the background. It's always happening. I'm sure there's a few emails in my inbox right now with feedback or thoughts around things, comments that people leave on my LinkedIn videos when I post about the product, all that kind of stuff. So it's constant.
Got it. Cool. Let's move on to the next. Ronald from Mount Laurel is asking, can you elaborate on the customer adoption spectrum? You talked a little bit about PMF and everything, but like, how do you actually apply this in practice?
Yeah, it's basically the a philosophy of regular improvements as opposed to a philosophy of one day we will have this thing called product market fit, and then we will change all the things that we do in our business from product development and market research and audience understanding to sales, right? Like push it out, sales, distribution, marketing. That philosophy I find maddening and dumb, and the constant improvement. I think that's the way to go.
Okay, on that note, Laundry from Tunisia or from Tunis is asking, when you're thinking about MVPs, what would your advice be to founders? Should they be building a lot? Like, what is that threshold of how many features they need to be building and all that?
Yeah. So I think about, I have a lot of thoughts on MVP as well. And I've written about that. But broadly speaking, my belief is that you should make sure that the core problem is being solved by what you release. Some number of features are needed to do that. certainly not all of them. And you can validate this by having private testing groups of people, right? People who say, I'm really interested in the problem that you're solving. I want to beta test. I want to see the thing before it comes out. I want to, play around with it. That's a great way to build up an email list too, which is super helpful when you launch. So I would just urge people to do that. I think I have a post about this.
It's like the death of MVPs.
Yeah, exactly. I mean, I think it's called.
I have a buddy who wrote about like these like MVPs are like don't like build them, but always optimize for the experience because you'll end up with something called the minimum viable experience, and that's that's even significantly worse. His name is Moz, he runs Novelty, but yeah, like I think that's very true. It's like you definitely want to build for something very very specific, right? And that's where B2B, like the customer conversations are really really helpful versus B2C. Very cool. You shared that. Let's try to do. We're running pretty close.
Yeah. I was gonna say I have to run in just a minute. So.
Okay, let's do one more question here. This one from Scott again on the angel path is he said very appealing versus the VC path. Is there a particular profile you're looking for in that investor? Again, most of these founders here are early stage.
Yeah. So the frustrating part here is not a lot of investors are familiar with this, and so you have to get people comfortable with it. But what I've found is, you got to build your network of people who have money. The good news is, like one in 20 Americans have more than $1 million, so they're accredited investors, and you have to be able to get people who know you, like you, and trust you, so that when you send them an email and you say, hey, like, I think this idea is going to work and here's all this stuff, you can sort of get them over the hurdle of this is a different new type of investing. Personal network is all that's there. I have not found that people who didn't know me already were willing to invest in Snackbar or SparkToro. So that's a networking process. And one of the best ways to build up your network, like I said, is empathy and care for other people. I think my whole network comes because I was like, oh man, I'm really interested in what you're doing. Like, tell me more about that. Let's hang out. I want to learn, how can I help you? I had this like unique expertise first in SEO and then in digital marketing as a whole. And so I was able to help lots of people. And those people that I helped, many of them are who became investors for us. I also really, this is weird, but I know people recommend against it. I like raising money from friends. I really do. I like my friends to be part of the business. I don't think, we're mature, emotionally secure adults. They know it's a risky thing. I know it's risky. Like, I'm going to try and keep it as low risk as possible, but I love having people that I enjoy, people that I like along for the journey. And I have, I would say almost everyone who's a SparkToro investor, I would count as a friend, probably at least 2/3. Almost everyone who's a Snackbar investor, a friend.
Nice. Get your friends to invest. Ran, thank you so much. This has been fun. I wish we had you for another hour.
Yeah, my pleasure. And thank you so much for having me. Thanks to everyone in the comments for keeping it really active and vibrant. And I wish all of you the very best of luck. If I can be helpful to anyone, you guys have my LinkedIn. You can also contact me. I'm rand@sparktoro.com.
Perfect. Yeah. Well, thanks so much. We'll let you go. Rand, thank you so much. It's been awesome. We'll publish this and then we'll share the details with you later. But everyone who wants to
thank you.
Thanks, Rand. We're going to end this session now, and what we'll do is we'll be able to do some light networking. Feel free to stick around and discuss with each other. There'll be some virtual tables. We'll have some team members on it. We still have about 50 people live, so hopefully it will it'll be enjoyable. Yeah, and if you want to learn a little bit more about FI, there's Emilion from our team has shared some more information. All right, thanks everyone. Enjoy the rest of your day. We'll see you at another online event. Thanks.